I sold off some of my stock positions this week, and Tesla went over $1,000, but quickly lost steam and came back to earth. Is this a sign of problems with Tesla stock? I'll tell you what I'm seeing and what my game plan is for Tesla stock this week. And you can copy off my paper right now. Welcome back, everyone. In this video, we will cover the huge week that just happened. What are the key takeaways from it? And I will lay out my strategy for the coming week and give a warning to Tesla investors. And if this is your first time here and you want to have fun and learn about investing, start now by subscribing and hitting that bell so you don't miss anything. And remember to like the video if you like making money, which should be everyone, because who doesn't like to make money? So let's recap the prior week. Monday, the Dow was up 461 points. Tuesday, the Dow was down 300 points. Wednesday, the Dow was down 282 points. Thursday, the Dow was down 1,861 points. And Friday, the Dow was up 477 points. So let's do some super technical analysis. Everybody apparently knew that Tesla was going to $1,000, but apparently no one knows why Tesla actually hit $1,000 per share. Let's do a quick Google search, and this is exactly what popped up. All I typed in was Tesla stock, and Google says, because Google's always right, Google says Elon pushes for a semi. We talked about this in the video last week about Tesla hitting $1,000. This should not have moved the stock around $100. But whatever, it's a strange market right now, so I'll go with it. Wait, no. It was because China approves a new battery for Tesla. Barely heard about that. Does LFP ring a bell to anyone? It apparently doesn't use cobalt, which is mined in Congo, which apparently there is a child labor problem there or something. So I guess this is good news about helping to reduce that, but China approving it isn't really much to move a stock $100. No, wait. It's the million-mile battery announcement. Hold on. That has been out there for some time now, so it really didn't have anything to do with the run up to $1,000 either. So the super technical analysis is, it really moved for no good reason. But I'll take it. What are my takeaways from the week? For me, there are really three big takeaways from the week. The first big takeaway, Tesla stock hit $1,000 last week. Go ahead and crush that like button right now if you were pumped when Tesla went over $1,000 per share. Come on, you can do it for at least that, even if you don't like me. You gotta like the fact Tesla got up over $1,000 per share. I covered a good chunk of this in another video, so I'll link that at the end of this video so that way you can check that out right there and get that information. But Tesla closed on Wednesday at $1,025. And starting that morning before that, everything I had was blowing up as the pre-market trading was up big. Instagram, Patreon, Discord, text and phone calls, all of it lit up like a Christmas tree. And after it happened, there was a ton of videos that posted about it everywhere on YouTube. I even adjusted my release schedule to cover that news in the video I just mentioned. The rest of the week, I tried to figure out a format where I could get that video out to you guys a lot quicker. I want to keep it high quality, but sometimes there's just news that just needs to get quickly to you guys, and my normal process takes about 10 to 15 hours for a single video. So comment down below if you have any suggestions as to what I could do to get that out to you guys quicker. Maybe like a live stream or just a raw reaction or something like that. I don't know. You guys probably have better ideas, so just comment down below with your suggestions. But I covered most of my thoughts in that video that I'll link at the end. But it was awesome to see the pure joy around a stock hitting that price. Holding that stock over $1,000 per share is going to be hard, but having achieved that mark at all, especially given what is going on right now, is just amazing. Having said that, the FOMO surrounding that was amazingly high as well. Probably all-time high, just like the stock. Don't fall into the FOMO trap. Just don't do it. Go to the FOMO group, watch the FOMO videos, I don't know, throw your phone away, put it in the trash can, something to keep you from FOMOing and buying that way. The second big thing that stuck out to me this week, Tesla was downgraded by Goldman Sachs and Morgan Stanley. So Goldman Sachs, who did not rate Tesla for over a year and then jumped back into rating Tesla a buy, has now downgraded Tesla. They downgraded it from a buy to a hold, but it did raise its price target from $925 to $950. They cite most of the same things we've been talking about as to why they took it down from a buy to a hold. While Tesla has long been an expensive stock, we believe that there is a higher bar for Tesla fundamentals than any other stock in our coverage, given Tesla's premium absolute multiple along with its historically high volatility. Still, Goldman has a long-term positive view on Tesla. We think that Tesla will be able to sustain a leading position in EVs, with solid margins, and we also believe that Tesla's use of similar parts, leading whatever ADAS/AV technology, and connected fleet bode well for both Tesla's margins and competitive positioning. So in the end, I may not like it, but I actually think it was a pretty fair assessment of Tesla. And that's shocking given the amount of crap that I usually give analysts because they're typically just ridiculous for the most part. But we will move on to maybe a little more ridiculous with Morgan Stanley. They were not as neutral in their opinion of Tesla. Morgan Stanley downgraded Tesla to underweight from equal weight and lowered their price target to $650 from $680. They did this because of short-term demand and pricing risk. Analyst Adam Jonas, wait, isn't he in a band or something? Like Jonas Brothers? Same guy? How many brothers are there? Okay, sorry, way off track. Anyways, he noted Tesla's recent price cuts in the US and China and updates to Tesla's Model Y program as reasons for the downgrade. He also hinted at Amazon being interested in the autonomous driving space. But, you know, since Elon and Jeff are such good friends, they can just partner, right? Oh yeah, maybe not so much. Don't get me wrong, I still think Tesla would be the winner. But someone as large as Amazon putting their weight behind a project could be huge. Whether we like it or not, or we want to admit it, Amazon has more cash than Elon can dream of. Amazon's cash on hand right now is $49 billion. And they're doing great things during this pandemic, so they may have more. Contrast that with Tesla only having around 8 billion or so. And I know, only 8 billion, really, I know, sorry. Amazon could easily spend more cash on autonomous driving than Tesla has total for all operations and not even miss that money. So do not immediately discount the threat Amazon poses. Oh yeah, and because Elon and Jeff aren't necessarily friends, and Jeff's company has a ton of cash, he could throw money at it just to make it much harder on Elon and Tesla. But billionaires aren't petty, right? Nope, they're above all that. But billionaires do subscribe to my channel and they like all of my videos. Elon, Warren, all of those guys. I'm just saying that the cool kids are here. And the third thing that I noticed this week is that the analysts did agree on two things. Now, both analysts clearly represent the two ends of the spectrum to me. Goldman being the bull case for Tesla, and Morgan Stanley kind of being the bear case. And no, I don't think ARK Invest, although I love them and I love what they're doing and how they've totally redefined the game, accurately presents the standard bull case side of the trade for Tesla. And what I mean by that is, the analysis that's done by the hedge funds, the big money institutional investors who are also bullish on Tesla tend to fall more in line with what Goldman's opinion is, not necessarily ARK Invest opinion. ARK would be more of an extreme example or kind of a all-in type bull case. Hopefully that made sense. I'm not really sure. Either way, doesn't matter. Goldman and Morgan agreed on two things. The first one was the continued deterioration of the relationship between US and China, and it may be starting to hurt Tesla a bit, and it could really hurt in the future. It is a concern to watch closely, as it has the potential to derail revenue and profitability moving forward in the short term for Tesla. And considering the great strides Tesla has made there, not just in sales, but also in the manufacturing and increased production, it would really hurt to have an external force out of their control hurt the Tesla stock. Having said that, Elon knew the risk when he put in the Shanghai Gigafactory. The second thing they agree on was the price cut. The price cuts were out of nowhere and really took everyone by surprise. And from every angle, it made no sense in regards to the timing of the announcement. Now we all know long term it's a great announcement, but the timing of it was just super odd. And really the only way it does make sense, because you're basically giving away profits, is if you are trying to kickstart demand, which of course means your demand is less than what you expected. The better way to do it, in my opinion, if, a big if here, if Tesla is not having a demand issue, is to announce this at Battery Day and say something to the effect of, because our new battery tech is so awesome, it will allow us to roll back prices and provide even more value to our customers while keeping our margins intact. Or make that same announcement 6 months from now. In the end, it doesn't matter where the analysts stand on Tesla, whether they're bullish or bearish. They are seeing the same short-term concerns that I am. My strategy for the week, and a warning to Tesla stock investors. As always, this is for entertainment purposes only. So it was a crazy week last week, both for Tesla and the overall market. And the overall market continues to ignore every fundamental metric there is. But it got a little bit, just a little bit, of a wake-up call on Thursday with a huge sell-off. But then it continued marching on again on Friday. So after seeing the huge drop-off on Thursday, and then positive after-hours trading leading into Friday, I decided to sell about 60% of my Carnival position at $20.10 per share. Anytime I trade, I post immediately over on Patreon if you are interested in seeing that. So now I'm basically just playing with house money on my Carnival stock. All right, I hear you right now. If I'm a long-term buy and hold investor, why did I sell? This was not a keep forever type of stock for me like Tesla or Apple is. When I looked at the devastation from the, illness, I thought that Carnival had the best balance sheet of the group, and I thought long-term they had the best chance of surviving and actually thriving when all of this was over. But my best case was 2x, and really best case 3xing my money in a great scenario in about a year, maybe even 2 years. I was prepared to hold for 2 years before I really bailed on the investment. But I was almost basically 2xing my money right now. So I took some profits that covered my initial investment since it ran way up ahead of any actual real profits or turnaround in the market or any actual demand for their product. If this was a year from now and the cruise industry was back up on its feet, recovering, and everything was all good, I would have sold all the stock at that point in time. But based on my strategy, my goals, my timelines, it was the perfect time to cover my position and basically play with house money at this point forward. My original investment strategy with the stock still stands, but I'm essentially getting to play the game for free now and risk none of my own money. That's one of the beauties of the market basically ignoring all reason right now and getting my expected return early. I get to play for free. Pretty cool. And now a warning to Tesla stock investors and how to protect yourself. There is a dangerous narrative out there starting to form. I heard the same thing and it reached a fevered pitch back in late February, early March. And then it went away for a while, but now it's back. And the narrative goes something like this.
Tesla is so awesome. Even if the market implodes, Tesla will go up 20% because Tesla is awesome and Elon is a god. All the investors out there will put their money in Tesla instead. Tesla will never go down again.
Now, agreed. Tesla and Elon are awesome. Not necessarily gods, but they are awesome. But the rest of that statement is absolutely false and ridiculous. We saw this movie in March. We already have the evidence. Tesla lost more than the overall market. And on the positive side, it has gained more than the overall market since the drop. But ultimately, Tesla did not gain 20% while the rest of the market sold off into oblivion. But people are starting to argue this point again that if the market crashes, Tesla will rise above it all and they're just immune to it. So now, more than ever, is the most important time for you to know your buy points and your sell points and have your strategy locked down. It's why I'm working feverishly on my course to get it out to you, so hopefully I can help out with that. If the market drops 20% and Tesla drops, 25 or 30%, what are you going to do? Are you going to panic? Are you going to buy more? Are you going to just freeze up? Are you going to have reverse FOMO? I mean, what's your plan? What's your strategy? What are you going to do? The answer lies in your planning, your strategy, and your analysis. But if your strategy is to rely on the Tesla won't tank narrative, then you are guaranteed to lose a lot of money. So click these videos right here to get the information on the stock market crash I see coming and for my thoughts on Tesla hitting $1,000 per share. Thanks.